Good afternoon, this is Tom Asprey, the Viper Report. It's Sunday, February 23rd. In last week's contribution to Forbes.com, I talked about it being a historically overbought market. I pointed out that at that stage, the Invesco QQ Trust, it follows the NASDAQ 100, tech and biotech, was already up 12.3% year to date. And I thought readers should know that that already exceeded the yearly performance of the QQQ in 2011, 2015, 2016, and 2018. Clearly, that high a gain in the first month and a half of the new year was quite unusual. In that article, I featured a chart of the S&P 500, pointing out that it had already hit its monthly R2 resistance with a high of 33.85. I'll be putting out an article later this week on using the pivot analysis, and I think you'll probably find it beneficial. Also pointed out that the AD line was positive, showing no signs yet of a top, but down below it, the bullish percentage had bounced back to 41.3 after peaking in late January. This is quite in contrast to the 20.3 level we saw in early October, which I identified as a low-risk buying opportunity. A number of stocks were quite overextended as Tesla, Apple, and Microsoft were all trading above their monthly Stark bands again in February. That last happened in January of 2018, and those of you who follow the market know how that turned out. For example, this chart of Microsoft shows that each of these weeks, pointed out by the arrows, we're above the Stark bands. The Stark band analysis indicates that that was a high-risk time to buy and a low-risk time to sell. And of course, Microsoft has come well off the highs. Well, the stock market got hit with some pretty serious selling towards the end of the week, as many investors realized that the rosy outcome they had been expecting from the Wuhan coronavirus may not actually come out. I've been warning about this in a high degree of complacency. As I was told early in the year that a client did not need to understand the stock market because it only goes higher. Clearly, any of you who follow the market for more than a couple of weeks or a couple of years know that's clearly not the case. The basis of my analysis is data, and clearly we did not have any real data on the scope or the extent of the virus, and we still don't. News over the weekend about cases in Italy is another indication that we really don't know what the impact will be to, most importantly, the people in the various countries, but also to the economy and to stock prices. The economic data on Friday also add to the selling pressure. We got a flash PMI from IHS Markit showing that both the services and manufacturing PMI dropped below 50. That's the level normally seen with entering a recession. Not yet conclusive, but this chart here does not look too great and does suggest that the economy may have some trouble later in the year. Many in the financial press are apparently surprised by the sharp decline in yields as the 30-year bond made an all-time low in yield this last week. I'd pointed out in the January 24th posting on Forbes that the yield in the 10-year T-note had just completed this flag formation A and B. And as I said then, it has downside targets in the 1.35 to 1.4 area. We closed at 1.471, and there's no real signs yet of a bottom in terms of yield. And so that trend could continue. Technical analysis works very well in the interest rate market, and this is another case in point. You can see it was a pretty rough week. The Dow was down 405 points. The NASDAQ was down 1.84%. S&P down over 1%. Utilities were even lower. One of the bright spots was gold, which was up 3.83%. At the end of January, I pointed out the bullish technical environment for gold and the gold futures. This is a monthly chart of COMEX gold futures showing the unbalanced volume had broken out, and this is an index called the HPI, which measures money flow. It was also quite positive. So the action this week is not surprising. In our Viper ETF report, we have a number of positions in the gold miners for both investors as well as in GLD, long from 120, 139. We closed at 155.22 on Friday. We also established a position in silver, which is starting to pick up steam as well. This is a table from tomorrow's Viper ETF report. This is another indicator I use to measure the market risk. In the green line here, we have the percentage of NASDAQ 100 stocks above their 50-day moving average. When it's very low, 5 to 10, like it was in the end of 2018, early 2019, is a low-risk buying opportunity. Then you look for bullish signals from the AD line like we got at that time. In a strong uptrend, pullbacks usually get into the 30 to 35 range for a good buying opportunity. That was the case both at the start of June and in August. Remember, that was the tariff panic. And in October, that was the time when the bullish sentiment I just spoke about was very low. Right now, this pattern shows a divergence from price. We saw one similarly in July and in May before we had corrections. So we're looking for this to pull back down to lower risk areas, which should create a great buying opportunity. Well, that's all I have for today. I'll have links in the email to the Forbes articles as well as the article on gold if you're interested. If you want to be prepared to get back into the market when the correction is over, I hope you consider either the Viper ETF report, where we recommend specific ETFs, buying levels, protective stops, and profit-taking levels, or the Viper Hot Stocks report, where we get into individual stocks. There have been some great opportunities in individual stocks lately. One we really liked was IVOA, that's Iovance Biotherapeutics. We bought it just a week ago, up about 11% right now. You can see it's had a really strong surge. It was up 4.42% just on Friday. And we have some advice for holders. We hit both of our buy levels here before we accelerated the upside. You can see we got a nice pullback to support on Thursday, but it held our stop. And the technical studies here look pretty positive, but as is generally the case, if we get a quick 10% profit, we take it on half the position and let the other half ride. Hope you have a good week in trading, and tune in later in the week for an update. Thank you.